What is going on, guys? My name is Family Shucks and welcome back to another video. Now I know it's been about a month and a half to 2 months since I last posted, and the only thing I can say is that, as you guys might not already know, I did start a new job at the end of June, and I've been in training for a few months, but since I finished training, I have now been assuming a lot more responsibility. So as a result of that, I can say that, I've been a little busy with work, and YouTube has since taken a back burner during the time I have been absent. But needless to say, things are calming down a little bit, so I think it is in my best interest to maybe start back up the YouTube channel and start trying to upload weekly once again. Now, regardless of that, I think it can be said that, as a self-proclaimed value investor and someone who buys shares for the long term, maybe 5 to 10 years is my investment horizon for a specific company, there isn't really much to report in terms of my portfolio. Now, I can be like some people who maybe report the news and what fluctuates stocks every now and then, but to be honest, as someone with very limited capital coming in every single paycheck, and also someone who doesn't really look at their investments as often as some other people do, there isn't really much to report about. And, I'm not actively day trading or anything like that, so I can't really report that much. But as you guys might know, I have since transitioned over to selling options, theta gang, and adopting the wheel strategy as of last episode. Now, since that time, I've been kind of dabbling with selling options and trying to understand technical analysis and the Greeks and all of that. Now, I will say I am still 100% an options noob, so do not take anything I say as advice. I am not an expert, I'm not a financial advisor, I'm not anything like that. This is all purely for entertainment. Now, since that last episode, I've kind of dabbled with selling options, just slowly getting my feet wet into this whole new realm, because I'm used to just reading balance sheets, I'm used to reading just annual reports, 10Qs, the news of a certain company, and making my investment decision based off of that, and also its projected future that I see in the short and also the long term. But with options and all that stuff, this is a completely new realm of trading and investing that I have never experienced. And the reason I'm doing this is, as I mentioned last episode, is to make a little bit extra income, increase the returns of my portfolio, and slowly I think that will compound and add more to my buying power and also to my account. And also, it just so happens to be that interest rates are very low right now. I think for my savings account, the interest it accumulates is 0.6%, which is complete dog shit. So what I've decided to do as of now, actually, is to move my savings over to my broker account and start using that as buying power to sell options. Now, I know this is probably not the best financial decision for myself, but as someone who isn't really spending that much, and I don't really have much expenses, try my best to increase the returns on my money, especially during this kind of environment in terms of stocks and also finances. So I guess for this episode, we'll kind of go over the few trades that I've made over the past month, because I did only start selling them at the beginning of September, and we'll kind of just do a quick rundown of what happened. So this is my spreadsheet that I have been using and adding on to kind of track my selling of options and collection of premiums. Now, as you can see on the top, it just has my total profits that I make so far and an average of my returns in a percentage form. And down here you can see, the stock, whether it is a covered call or a cash secured put, what is the length of the option, whether it's monthly or weekly, the strike price, the collateral I put up for it. It's more applicable for cash secured puts and the collateral I'm putting. For the collateral I'm putting for covered calls, this is probably wrong. I'm just putting the cost basis I got my shares at times 100. So in the case of Net or Cloudflare, my cost basis for it is $39.08. So multiply that by 100, it comes out to about $3,900. And I'm also recording the premium I collect, whether I close it early or just let it expire worthless. But it also tracks, how much it costs if I decide to close it at a loss. And also the key important thing is how much did I profit, my percent return, and the other stuff that I have following after that is kind of just extra details that I don't really need to look too deep into, like when I sold it on, what time it expires at, whether it was signed, was my option filled. Obviously it'd be yes, and also any sort of extra details. So I'm not really working with a lot of capital right now. I am probably what you would consider a small account, working with between $3,000 to $5,000. So at most I could only afford a couple contracts on very low price stocks like Bank of America trading in the 20s, and anything lower than that. I can't really afford higher costing stocks, and also I'm just working within the limitations of my option capabilities. So in my brokerage account I can only sell covered calls and cash secured puts. I don't think I'm able to sell anything naked or anything like that, and that's something that I'm really comfortable with. I could optimize my returns by doing other sorts of strategies, but I don't think I'm at that level yet, and that's okay with me. I think I can work pretty well with just selling covered calls and cash secured puts. But regardless of that, let's just kind of jump into the trades that I've made since the beginning of September. So the first contract that I sold ever was on Net or Cloudflare, and I sold a covered call on it because it is the only company that I have over 100 shares in, which is a good and bad thing. I think it's something that I'm going to talk about a little bit later when it comes to my third trade. But the length of this option was monthly. I set it at a strike price of $41 because at the time of selling this contract it was the beginning of September 10th, and it was currently trading at a price of $34, and it had about 2 weeks till expiration. So I received a $15 premium for it. I put up my collateral, which is my cost basis, and at the end of it, it expired worthless. So I made a nice free $15 from that, and obviously that is the profit minus the commissions, which I used TD Ameritrade for, so it's 65 cents for the commissions. And I think that's a decent return for my first trade, 0.37%, and it expired worthless like I mentioned. And now the next trade that I got into was on Bank of America, and I decided to sell a cash secured put on this, and it was a weekly. It was currently trading at a price of $24.20 at the time, and I sold a put for $23.50. Now this was at the same time of when JP Morgan and I think other banks, news was coming out in terms of their involvement with criminal organizations and them willingly moving money back and forth for them. Now that was for JP Morgan, and for some reason other financial institutions like Bank of America also got affected to it. So we saw the price at the beginning of that week go from $24.20 all the way down to about $23. Now I had about 2 days left until expiration because I sold it at the beginning of the week and expired at the end of that week. So as you can see, I sold it on Monday on September 21st and expired on that Friday 9/25. And over the course of the week, the stock price went down because of the news. I received a $14 premium for it, and my collateral was $23.50. However, as the price got lower and lower, obviously it made it more closer to in the money. And as a result, what I decided to do was close this contract for a loss, for a $50 loss. Including commissions, that would be $50.65. So obviously, I was kind of newbie. What I could have done was roll the option down and out, maybe another 1 to 2 weeks, and that probably would have allowed me to collect some credit, so I wouldn't be at a loss, but that would just lock up my collateral for a little bit more time. And as we know, Bank of America didn't end up stooping underneath $23, so what I could have done was sell a $23 put on Bank of America, and I probably would have collected a nice premium for that, as it would have most likely expired worthless. But what I decided to do actually was redeploy my collateral or my cash elsewhere. What I decided to do was not only buy to close this contract, but use the cash that I had from that to then buy shares of Bank of America and also JP Morgan. And I thought that was a little bit of a wiser decision for me at the time, because JP Morgan was, I think, at a price of $93 that week. And my cost basis for JP Morgan at the time was $95, so I thought $93 for JP Morgan is such a steal. And I think I scooped up about 15 more shares of JP Morgan, which I thought was an excellent deal. And then I also bought, I think, 20 to 25 more shares of Bank of America. And those were both at a very good price of low 23s for Bank of America and low 93s for JP Morgan. At the same time, not only did I sell a cash secured put on Bank of America, but I also sold a covered call on Cloudflare once again, this time for the full 30-day or 30+ day DTE, days till expiration. So at the time, it was trading around $37 at the beginning or mid-September. Now, I thought I picked a pretty well out of the money strike price at $42 once again. I saw that it was traveling a little bit upwards since last week or 2 weeks ago, but I thought it would hit a bit of resistance at the $42 level, just because over the past month, $42 seems to be where it was capping off at. So I thought $42 would be close, but it would still potentially expire worthless. Now, although it is expiring next week, or next Friday on 10/16, October 16th, now as you might not already know, Cloudflare blew past my strike price, well beyond it actually, and it is now trading at $46.35 at the end of this week. And let's see how much of an increase that was. That is a 10.36% increase since Monday, and I was not expecting that whatsoever. And I knew that it was going to have a breakout eventually because of how stagnant the stock was, but I didn't think it'd be now out of all times. So my contract is well deep in the money. As you can see, I sold it at a strike price of $42, but it is currently sitting at around $46. So the trade-off of covered calls is that you're capping your profits. So I am technically missing out on a minimum of $400, which it hurts on the inside. And I was kind of hoping that this contract would expire worthless so that I could keep my $70 in premium, but it is too costly right now to close this contract, and I don't really want to roll it out, because as of right now the premiums for next month or 2 months out aren't really looking to be worth it, and that's something that I might consider closer to expiration next week, maybe on Thursday or Wednesday, just seeing how the market will open on Monday in terms of Cloudflare. Maybe that'll change my mind, but as of right now, I'm holding on to that diamond hands mentality. But I think I will let myself get assigned the 100 shares on Cloudflare. Now, you might be wondering, why do I want myself to get assigned? Kind of what I alluded to before. The premiums for next month or 2 months out, they're not really that worth it. And I think it might be a little bit smarter in terms of portfolio management and also diversification to reallocate that cash elsewhere, because in actuality net is my largest holding right now in my portfolio, and I don't really think that's a smart decision. Now, although I am very bullish on net, it is still a risk that I took when it came to investing in this company because it did IPO last year. So it's still in the works, you know, anything could happen to it. It's still yet to prove that it has any profits. I know I did read that they are having their next quarterly meeting next month, but that being said, it is still a risky company to invest in, and I don't think it should be my largest holding. If anything, it should be a little bit smaller, and I think the covered calls, although I am sad that I am missing a lot on this upside, I think it will probably be beneficial for me to reallocate that cash elsewhere. And at the end of the day, you know, profits is profits. I am making a 9.25% return on this trade, which I can't complain about, and I think it will allow me to free up some cash and experiment more in terms of selling options for premium. And because, you know, a lot of my cash is locked up right now and I don't really have a lot of buying power, so I think by me, you know, freeing up that cash, about $4,200, I will be able to play around more with selling options and get a little bit more experience with it, and hopefully increase my returns and be a little bit more smarter with how I am trading and also investing. So yeah, that's about it. Thank you guys so much for watching, if you even made it this far, and I will see you guys next time. Peace.